We have a huge amount to cover this morning, and we have an extremely bright day here in Kauai. And for some reason, it isn't showing up on my face. So if you care that I look really dark this morning, don't don't even bother to tell me in the notes below. 5 more days in paradise, and then a travel day. I'll be back in my regular studio with my professional lighting, which somebody said one day. Randy, I like your lighting better with this Hawaii natural sun. Anyway, lots and lots to talk about this morning. Hang in until the end for sure today. It's good. I mean, there's a lot, but it's really important today. This is a very big day. The stock market's not really showing it. I mean, it's up and Tesla's up nicely this morning, but it's the news is way more critical today than the stock market is giving any evidence of. So, what are we going to be talking about? We're going to be talking about the courts strike down the POTUS tariff authority. We'll talk about that in detail. The Tesla Robotaxi rollout is June 12th, but driverless vehicles are already testing in Austin for several days, and Tesla has the authority to sell rides in California now, to sell, I don't know, I guess sell some kind of rides. We'll see that article in a minute. POTUS agrees with Elon that the big, beautiful bill could be better. That was good news. And Republicans are preparing a big, beautiful rescission bill. So that's really good news, and as predicted by moi. Bastion Braun 121 says this morning, breaking, Tesla's robotaxi test vehicles in California are marked with TCP, confirming official approval for paid service operations. The future of robotaxi starts now. Now, I'm not 100% sure. This is not giving us any evidence one way or the other. This article is not saying, or does this mean that they can offer paid services and also autonomous paid services, or is it just paid services as long as it's supervised? That's not clear. So we need a little more information there to be 100% sure. But hey, progress. This is why Elon believes that they'll be ready to go in California shortly. Is they know what they're doing. Next. All right. This is from RDD 147. That's at RDD 147. He says Tesla. We tested our first driverless robotaxi with an engineer in the passenger seat and also a brake attachment. Now, what's that all about? It seemed like you could just have a little joystick or something on the screen that you could just push it if you want to brake. Anyway, not sure how all the specifics on that, but we definitely know that this is where we are right now in Austin. Sawyer Merritt says Tesla has released a new statement opposing the removal of energy tax credits proposed in the Trump new bill. He doesn't care about the $7,500. What he cares about is the energy tax credits. Quote, we urge the Senate to enact legislation with a sensible wind down. This will ensure continued speedy deployment of over 60 gigawatt capacity per year to support AI and domestic manufacturing growth. Abruptly ending, goes on with the quote from Elon, abruptly ending the energy tax credits would threaten America's energy independence and the reliability of our grid. We urge the Senate to enact legislation with a sensible wind down of these ideas. So I think I'm believing that Elon will get his way on this because they owe him. And because actually it makes so much sense. This is what I've been saying all along. I said I thought if you go back and look, I said the $7,500 would be done on January 1st. That's what's in the bill. I said the energy portion would be wound down much further into the future, which it is, but Elon's saying it needs to be even longer. Maybe back to the original. I'm not sure, but maybe something in between. Jensen Huang, this Mario Nawfal is reporting on Jensen Huang's saying this, humanoid robots will be a multi-trillion-dollar industry. Quote, this is the first robot that really has a chance to achieve the high volume and tech scale to advance the field. And he was saying all this while he's talking about Elon Musk. It's very likely we'll be able to deploy humanoid robots into the world relatively easy. Oh, easily. He did say that correctly. I didn't. He finally says, I think this is the next multi-trillion-dollar industry, and I'm very excited for Elon. Jensen went on to say in another article, he says, we do a lot of business with Tesla and xAI. Elon's an extraordinary engineer, and I love working with him. We've built some amazing computers together, and we're going to build more computers together. His self-driving car, his Optimus robot, and his and he also said, and somebody got this wrong here. He also said, and Grok, every single one of them is world class and revolutionary. In fact, I'm going to say to you, watch out for 3.5. According to Brian Wong, this is going to be huge. According to some others, when the Grok 3.5 comes out, it's going to be maybe not quite game over. It might take until Grok 4, but it's going to be very close to. It'll give you the evidence that Grok is going to win the game. AJ says about Nvidia this morning. Speaking of Jensen, Nvidia Q1 deep dive. He says, bottom line, this was an exceptionally strong print given the large impact of the H20 ban. Nvidia will definitely become the most valuable company this year, absent more bans. Yeah, they'll become the most valuable company this year. I agree. And then next year, Tesla will become the most valuable company. Number 3, stock will establish a higher trading base and exceptionally strong fundamentals. Number 4, Nvidia is still relatively cheap on the fundamentals. Agreeing with all those, not investment advice, and I don't invest in Nvidia. But I think he's right about all those things. Market watch. The stock, meaning Tesla, has been rebounding as Musk's time at DOGE neared an end. It has already recovered a little more than half of what it lost, 54.7% as of Tuesday's close. And late Wednesday, Musk confirmed in a social media post that the time has come. So he's, made his official announcement in DC. The stock is now approaching a key technical level, roughly at 380. Okay, so I say the technical level is 365. Brian Wong says the technical level is 360 to 360 to 3. Yeah, right in there, same thing. But this one says 380 as it marks the convergence of two potential resistance points. First, the January 2nd closing low of 379.28 is one level to watch. That level has stopped the initial sell-off from the December high, then provided some support before the stock slid back through when it was going down. Many chart watchers believe prior support levels will morph into resistance when revisited, as those who bought on the way down and are underwater in their position may be happy to sell when given the chance to break even. I don't know about the psychology of it, but we definitely have seen this. Another big chart level is the 61.8% Fibonacci retracement level of the sell-off, which comes in at 381, so similar. There is a belief among many chart watchers that the Fibonacci ratio of 0.618, which is often referred to as the divine ratio, given its prevalence in the natural world, also applies to financial markets. This provides traders with a target for when the stock is bouncing and a level to place some kind of take profit orders. So this makes the full retracement of the sell-off. The next upside target, which is the base case of Tesla stock, would be 479.86, or for some people, because intraday was 488. In comparison, at last week's high, the S&P 500 index had retraced 84.5% of its sell-off, heading back towards its all-time high and continuing this morning. So can Tesla stock clear the technical hurdle? Dan Ives, the prolific Wedbush analyst, believes it can. He said Musk's official departure from the Trump White House is music to the ears of Tesla shareholders, with Musk now laser focused on Tesla. As I mentioned yesterday and the day before, when Elon focuses, this is key, and this is true for all entrepreneurs of Elon's ilk, but it's even more true for him. He believes the launch of Tesla's Robotaxi service in Texas on June 12th will help usher in the next era of growth for the company and fuel the next leg of the stock's rally. But keep in mind that with a $500 stock price target, which implies roughly 40% upsides, Uff is Wall Street's biggest bull on Tesla. He's Wall Street's biggest bull, but he's not as big a bull as I am. I'm still saying that we will hit the 488 last night I moved my target again. I moved my goalpost again, but I moved it with a reason, right? Because I thought we would probably launch on June 1. We now have the semi-official June 12 date. That means I get to move my date by 2 weeks. I think we'll see quite a run-up between now and June 12. And I do believe that we will hit the all-time high between now and June 12th or shortly after, in that 2-week period, as the Robotaxis do well. I'm sure they'll do well. This is Randy Kirk. I'm halfway done. Maybe not. Close to halfway done. Please hit like if you've already liked it, or maybe you haven't, you just like listening to the show, hit the like, subscribe, notify, all that stuff. Later on today, a very regular day, we will have Bradford Ferguson followed by Cern Basher. How much better does it get than that? And thank you all for watching. My numbers are way up compared to where they've been, and I'm very excited to see this improvement. A top economic advisor to President Donald Trump expressed confidence Thursday that the court rulings throwing out aggressive tariffs will be overturned on appeal. Kevin Hassett, the director of the National Economic Council, said in an interview that he believes the administration's efforts to use tariffs to ensure fair trade are perfectly legal and will resume soon. So, of course, we'll have an appeal. The word I saw in another article is the appeal will be sent up to the appeals court. But this was a district court ruling, a special district court. There'll be an appeal to the appeals court, a federal appeals court. That will happen as early as Friday. This will probably be handled expeditiously, undoubtedly. And of course, they can go to the Supreme Court if necessary. He says, we're right that America has been mishandled by other governments, Hassett said during a Fox Business interview. This trade negotiation season has been really, really effective for the American people. 100% agree. I think the stock market agrees. The comments follow a ruling from judges at the Court of International Trade who said Trump exceeded his authority on tariffs, which are aimed both at combating barriers against American goods abroad and stemming the flow of fentanyl across the U.S. border. While the Centers for Disease Control and Prevention have said that fentanyl is the primary driver in domestic overdose deaths, the judges ruled that related tariffs fail because they do not deal with the threat set forth in those orders. Sounds like nonsense to me. Hassett bristled at the ruling and said the administration will continue its anti-fentanyl efforts. These activist judges are trying to slow down something right in the middle of really important negotiations. He said, the idea that the fentanyl crisis in America is not an emergency is so appalling to me that I'm sure that when we appeal, this decision will be overturned. The administration also has multiple options to get around the judge's rulings, including other sections of trade laws that it can utilize. However, Hesse said that's not the plan at the moment. Quote, the fact is that there are measures that we can take with different numbers that we can start right now. There are different approaches that would take a couple of months to put in place. But we're not planning to pursue those right now because we're very confident that this ruling is incorrect. From Mario Nawfal, more from Jensen Huang. Tariffs are a vision to reindustrialize America. The first idea, he's talking about Trump. He just was so praising Trump. He said the first idea is utterly visionary. Tariffs used as a pillar to reindustrialize, to onshore manufacturing, to motivate the world to invest in the United States are part of a bold and transformative vision. This isn't just economic strategy. It's a century-defining shift that could reshape America's industrial future. I believe Jensen Huang. Everything Jensen Huang says, I believe. He's certainly number two to Elon Musk in terms of leading the tech revolution right now. Everybody pays attention to what Jensen says. Apparently, Jensen thinks that Elon is a genius, that all three of the major things that you and I are watching are phenomenal. And they're going to be multi-trillion-dollar businesses like we think. So why did Gary Black sell his stock yesterday? He's not. Who's he listening to? He's not listening to Elon, not listening to Kathy, not listening to Jensen Huang. Who's Gary's muse? Market Watch says this morning. Senate Republicans are urging Elon Musk to stop going it alone, and they want to use Congress's formal rescissions process to make the controversial government spending cuts permanent. This is a pivot that would provide legal backing to the so-called DOGE cuts, but potentially expose politically painful decisions to public scrutiny. The Department of Government Efficiency, or DOGE, has become one of the most polarizing initiatives of the second Trump administration, with supporters hailing it as a long overdue assault on government waste and critics lambasting it as an unconditional power grab that violates the separation of powers. So you may remember that Elon Musk, when he was first starting out in DOGE, and other people at the same time were saying, hey, instead of big, beautiful bills, how about lots of small bills? So my understanding is right now there's a $9 billion rescission product that's a bill that is headed through the Senate and House. Then there could be another one for 50 billion and another one for 25 billion. And we don't have to do it all in one bill. So take them one at a time, try to get them passed. And if you don't get them passed this time, throw it in another bill later and see if you can get it past them. The White House, quote, the White House, I'm urging them to come up with a rescission package, according to Lindsey Graham. So it's time for the White House now to go on offense. We're losing altitude here, and the way you can regain altitude is take the work product, get away from the personalities and the drama, take the work product and vote on it. So this is something, my understanding is that the federal government, or I'm sorry, the Trump administration needs to send their rescission bill, as opposed to starting in the House or starting in the Senate, that starts with the administration, and they say, look, here's the cuts we want to make in the budget that we're currently operating under. You've voted on some bills and you said you want us to spend 100 billion on something. We only want to spend 90, so we want to do a rescission for 10. So they send that to the House and to the House and the Senate, get it passed. I think it only requires 51 votes. This is what they should be doing. And I said this how long ago? The pivot to rescissions comes as Musk and DOGE face increasing legal challenges, constituent complaints about service disruptions, and concerns among Republicans that Musk's aggressive tactics could backfire. Senate Republican Rand Paul of Kentucky revealed he asked Musk to consider a rescissions bill of at least 100 billion and perhaps a series of such bills. Oh, what? That could ultimately claw back as much as 500 billion of funds already appropriated. Yes. So budget experts warn that DOGE's unilateral cuts likely violate a 1974 law specifically designed to prevent presidential overreach. What hasn't received enough attention is the action of DOGE to just cancel all this money the quote here is a blatant violation of the Impoundment Control Act, according to Charles 𝐄𝐦𝐚𝐢𝐥, an assistant director of the Offices of Management and Budget during the Clinton administration. It's a direct assault on Congress Article 1 appropriation. I mean, here you've got a guy who's not elected, not even confirmed. He's just deciding not to spend money, and that's blatantly illegal. By the way, I think that's just the most ridiculous idea ever, is that the U.S. government, once the Congress passes a bill, they have to spend every dime. It makes no sense. It's ridiculous. But we do have this rescission capability. We need to use it. The Impoundment Control Act was passed in 1974 following President Richard Nixon's attempt to impound congressionally appropriated funds. The law provides two legal ways for a president to defer or cancel spending: deferrals, which temporarily pause spending for efficiency purposes, and rescissions, which require congressional approval. Under the rescission process, the president look here, it explains it. The president proposes the cuts. Congress has 45 days to approve them through a filibuster-proof process requiring a simple majority of the House and Senate. So, market implications. Wall Street is watching these developments, as the eventual outcome will significantly impact government contracts, bond markets, and the broader economic outlook. If they want to do this the right way, they would propose rescissions and have Congress vote. But there's a big but there, and that is the reason they haven't done it is that it's much easier to just go into the computer systems and shut the money down. No, that's not the reason. The reason is that they're trying to pass the big, beautiful bill. That's where all the time and energy being concentrated. Now that the House is done with the big, beautiful bill for now, and the Senate's working on it, it's a perfect time for the president to start sending over rescissions. Public transparency may be precisely what Musk and the Trump administration want to avoid, Kovensberg noted. If they actually did it the legal way and proposed rescissions to Congress, then there'd be transparency and open public debate, and a lot of rescissions would probably not go through because they would have to focus on the ramifications. No, this is the most transparent administration ever. Every single thing that's been done has been totally transparent. It's been put up on a website. The people have been debating it, talking about it, and some of them get, a lot of high points. Other ones, as noted here, there might be a struggle. Fine, let's do the rescissions. The rescissions path, while providing legal cover, would expose each cut to congressional scrutiny. This creates a dilemma for Republicans who broadly support She predicts the budget deficits will be dramatically increased this year, moving well above $2 trillion. Actually, what turns out that maybe not. Maybe it's actually going to be way less than $2 trillion because they're not. The budget office is not doing the write-up correctly. Republicans are set to attempt a rescissions package, with Graham telling reporters Musk, upon learning of the rescission procedure, appeared eager to. Musk mentioned it months ago. The move toward rescissions would represent a significant tactical shift, bringing Congress more directly in the process. Um, okay, that's the end of that. So basically, that's what's going to happen next. Watch it. Well, it'll be fun. The bond market will go crazy. They'll love it if some of these rescissions are passed. In the week ending May 24th, the advance figure for seasonally adjusted initial claims was 240,000, which is an increase of 14,000 from the previous week's revised level, which only revised down by 1,000. And the 4-week moving average was 230,000, a decrease of 250, not 250,000. Anyway, the numbers are very, very similar to where they've been, a little higher, but we do get these weekly numbers being up and down. If you get 2 or 3 or 4 weeks in a row like that, we might be more concerned. The total number of continued weeks claimed for benefits in all programs ending May 10th was 1,000,008, an increase of 492. So this is the one I always talk about. It suggests that layoffs are not happening, and that the job market is solid. People are able to find new jobs. This is pending homes. So pending home sales decreased 6.3% in April, according to the National Association of Realtors. Now, we know that April was still slow. May is still slow. I don't expect, I'm going to change what I said the other day. Interest rates are not that high. They're high. They're over 7%, but it's not crazy high. So I'm going to change what I told you the other day. I said when interest rates come down, which I think they will, even if they don't come down by June, July, housing sales are going to start picking up again. People need a house. And people know today, which I don't think they knew 20 years ago. I think they now are way more sophisticated on mortgages. You get the 7% mortgage, and if they come down a year from now, 3 years from now, you just refinance at the new level. The pending home sales index, a forward-looking indicator of home sales based on contract signings, dove 6.3%, and pending transactions retracted only by 2.5%. Okay, then we got a revision in the GDP, and the first revision was slightly up to a negative 0.2% instead of a negative 0.3%. And this had to do primarily, my understanding, quick read this morning, was primarily due to inventories being even higher than expected in terms of this pull forward on product coming into the country. The real age, I don't think none of this is having the jobs number, the housing starts number, and this number, having nothing to do with what the market is doing this morning. In my opinion, it's all very flat, flat, flat. I mean, those were all inconsequential. The real EJ on Tony says, as expected, real GDP growth was revised slightly as more of the import surge is accounted for in private domestic investment, which exploded 24.4% and contributed plus 3.98 percentage points to GDP in Q1. Overall, the various economic reports are continuing to show a decent economic pace, with high interest rates the only serious holdup to a much stronger economy. Thus far, tariffs are not showing any serious impact. Okay, this is, I think, the next to last article. This is from the Globe and Mail. Very, very important. It's a little wanky, a little wonky. Anyway, it's a little bit thick in terms of bond speak, but hang in there. I think you're going to appreciate it, and then we'll get to the numbers. David Rosenberg, big bond guy, really smart guy. Let's unpack what has been going on in the malign bond market and where I think we are going from here, because quite frankly, as an investment, I like where the treasury yields currently sit. I like them a lot, in fact. The story has been in the term premium. The term premium is the additional yield that investors demand to hold onto the longer duration securities. It reflects the inherent policy risks and uncertainty that's embedded in nominal bond yields that are not explained by the economy, by inflation, or by the Fed. The sort of things that are only explained by other factors. At first, the surge in long-term yields reflected all the uncertainty surrounding trade and tariff policy, but that took a bit of a respite in mid-April when Donald Trump offered olive branches and started toning things down. But then that was replaced with the uncertainty, the fiscal risk premium embedded in treasury market, as investors sense that the White House and Congress are bent on taking what already was an unsustainable budget path into a completely different orbit, a worry that, in my opinion, is way overblown. So this is what we've been talking about for 2 weeks now, is that the bond market, and might even be some people that are doing this on purpose to send a message to the Republicans, that the deficit there needs to be more work on this budget and to show more money coming out of it so that we're not increasing the deficit. We're working towards getting back towards a balanced budget. The Treasury, and he believes that that this is way overblown. The Treasury market term premium has spiked 60 basis points since early April to the highest level in 11 years, and it now is 100 basis points above the norm of the past decade. So if we come down 100 basis points, we're at 3.5. This is where we should be right now. It would be one thing if inflation expectations were surging, another if growth expectations were surging, but neither are at this point. And consider this, only 15 other times back to the early 1960s has the term premium surged that much over a one-year time frame, and this has coincided, and those coincided with economic recessions more than half the time. And we're not going to have any recession. In fact, we're going to boom times by the fourth quarter. If not for the general policy uncertainty out of Washington and now heightened fiscal risks, the 10-year T-note yield would be below 4%. Not 4.5 as it is right now, based on his reading from the breakdown of the interest rate structure. Yeah, that's what I've been saying, right? Once a recession commences, yields will head back down, but the fiscal largesse will be obviously limited to the extent of the bond will limit the extent of the bond rally. Still, a 5% plus long-term bond yield benchmarked against a 4.6% equities earnings yield, that's the market value of the S&P 500 companies' earnings divided by the 500 index level, should be a bit of a no-brainer for asset allocators. In the meantime, the 4.4% yield currently on 3-month T-bills will serve as an attractive alternative and a refuge, and patience will be rewarded. Now, few bogeyman claims to be addressed. First, the answer is no. The United States is not becoming some banana republic. The second answer, again, is no. There's no evidence that there's some foreign buyers strike in U.S. treasuries. Third, the answer is no. Once again, the big, beautiful bill going through Congress is not at all economically stimulative. I don't agree with the third. I think it's economically stimulus to the extent that it cuts taxes and doesn't raise them as a result of ending all those tax breaks that are in there. It says there's no physical stimulus in the bill. It is restrictive, limiting economic activity and growth. It's just not as restrictive as it could have been if the 2017 tax cuts had been allowed to expire. That would have been very restrictive, which would have thrown the economy over the fiscal cliff. Well, okay, he's agreeing with me. The total deficit increased over 10 years is indeed just over $3 trillion, including interest costs, but all of that sum and then some comes solely from the cost of extending those tax cuts from 2017. Together with all the program spending restraint, there's actually a net drag on the economy of US 1.5 trillion or US 150 billion per year in the coming decades. That is not a stimulus. I don't agree, but that's okay. I was amazed recently as the 10-year note yield approached 4.6 that every Tom, Dick, and Harry economists and strategists were calling for it to retest the cycle highs. If you were paying attention, that was 5%. But the condition for the bond market could not be any different now compared to a few months ago. The funds rate is at 4.25%, not 5.25%. So the Treasury market naturally carries a lot better. The year-over-year real GDP growth rate was 3.2%. The nominal trend was to 5.9. Today, those numbers are 2.1 and 4.7. The unemployment rate was 3.9. It's now 4.2. The industry capacity utilization rate was 78, and it's now 77.7. The core inflation rate in October was 4%. It's down to 2.8. The headline was 3.2, and it's now 2.3. What am I missing with these outrageous views on the Treasury market? That's what I've been asking. And there's something else. Back in the summer of 2020, when the 10-year note was trading at a minuscule 0.5% yield, you had no coupon protection at all. Since bond prices and yields move inversely, it would only take 6 basis point increase in yield to erode your capital and send you into negative total return territory. Today, at around 4.5% yield, the rate would have to surge 66 basis points, setting a new cycle high for you to lose money in the 10-year Treasury note. Now, that's a whole lot of coupon protection. But if for whatever reason the yield were to go down those 66 basis points to a level that it was trading in just last September, the total return would be close to 10%. He says that's a trade-off that looks very appealing to him. For the anti-60-40 asset mix crowd, I posit it makes the equity market What makes the equity market different is there's no such thing as coupon protection. There's no dividend yield protection, but for that, you need to be the most boring defensive. You have to be in the most boring defensive segments of the market, like utilities, tobacco, and food products, and resist the temptation of adding to the Mag 7 slice of the portfolio. I hope that made sense to you. Let me know in the comments below if that was valuable to you. Obviously, hit the like button if you haven't done that yet. I think that was important, don't you? I didn't put it last as some kind of a way to keep you here. I thought some people that would just be too wonky. So let me know what you think. All right, so Tesla up 1.17% right now at 361.06. It is trending down a little bit right now. Generally speaking, what I think. I think it's going to be up, up, up for the next 2 weeks, and then either hitting all-time highs by the 12th, if the 12th is confirmed, or possibly hitting all-time highs within the week or two after the 12th as we have the rollout and it happens safely. We've got the Dow Jones basically flat, 0.03 up. NASDAQ a little bit better than that because of Nvidia, up 0.43, and the S&P also because of Nvidia up 0.29. You've got Apple and Google down. You've got Nvidia up 3.72% on their good earnings report yesterday. If you didn't watch last night, Brian Wong and I talked a lot about the Nvidia report. That was a very good session with Brian. You've got the Cathie Woods are mixed this morning, like almost a half and half. Interesting that anyway, I won't go into more details there. Okay, let's go ahead and move on to bonds, down 5.3 basis points because of the article that I just read. Yeah, this guy is a big deal, and people do pay attention to him. I don't know that that's what's moving the bond market, but the bond market is down 5.3 basis points to 4.426, but obviously a long way to go to get down to the 66 basis point reduction, which he's talking about. Okay, we've got oil down 92 cents, sitting at $60.92. Natural gas down 2.33% at $3.47. I would just call all those good and fine, great place, good location. Hopefully doesn't move a lot over the next months. Gold is firming up this morning, up $23 at 33.18. Silver also up 0.81. Did read an article yesterday that suggested that silver is either silver's undervalued or gold is overvalued historically, and certainly we've seen this. My bet would be on gold coming down, not silver going up at this point. Copper is down a little bit at $4.67, like right in the middle of where it typically trades. The dollar mixed again as usual. It's up on one currency and down on another. Crypto Bitcoin is down 598, sitting at 106.7. So now about 5% off all-time highs. Taking a little profit taking shouldn't be shocking. Going from 70,000 to 110, 111,000, profit taking would be expected. All right, so that is everything that I'm going to report to you this morning. Again, come back and see us. Hit that notify so you can come back and see us with Bradford Ferguson at around almost exact. Well, it takes a long time to upload right now, so I'm going to say 5:45 California time, and then 8 o'clock California time for Cern Basher. Yeah, and then I'll put the Brian Wong video up here for you to go back and check that out from yesterday. And finally, let's just take one more quick look at Tesla. Tesla is starting to turn the corner. I think we end up above 365 today. How's that? There's my little suggestion for the day. We end above 365 for today. That's it. I know I went really, really long, but let me know in the comments. I think it was all important. It's been great talking to you.